It wasn't long ago that some big banks were calling a worst-case scenario of a 30% plunge in house prices. Flattening the COVID curve has seen predictions moderate to more like a 10% drop. But the recession is still biting, with new home loans down to a 5-year low. For those in secure employment, though, there's a silver lining, as historically low rates fuel a boom in refinancing. Now, more than ever, it's paying to shop around for a deal. Rachel Papazoni reports.
Property owner Swarath is one of the lucky ones. A falling and uncertain market has seen lenders offering rock-bottom deals to borrowers, and she's been able to shave thousands of dollars a year off her mortgage repayments. She's wiped 1.2% off the interest rate for her investment property and another 20 basis points off the rate for the apartment she lives in.
Which is a massive drop. So definitely the rate was a big motivation for me to shift over and go through the whole process.
Swa is one of an increasing number of people who are refinancing their home loan in the unfolding recession, as lenders offer sweeteners.
They provided a $4,000 cashback, which definitely helped boost the savings.
While competition is intense, new home sales are slipping, and that means less business for banks. The value of new home loans fell almost 5% in April, the sharpest monthly decline in 5 years. That's more than $900 million less than the month before. But for existing borrowers, refinancing rates have passed go. Almost $8 billion worth of existing home loans were refinanced in April, double the amount for the same time a year ago. Historic rates of unemployment had led to worst-case scenario for property prices to fall by up to 30%. Now the COVID curve has flattened. There's broad consensus from economists those falls could be more like 5 to 10%.
It's quite likely that over a 3-month period that the market could fall by another 5%. And let's call it straight now, the market is falling as we speak. There is no question about it.
As we make our way out of COVID-19 restrictions, interest in housing is growing. Visits to realestate.com.au have doubled since the March low.
It looks like people have become a little bit more serious about being prepared to buy or sell real estate, but we're still not seeing too much activity in the transaction numbers.
For people shopping for their next home and still in a job, the hurdles to secure a loan can be higher.
If you're in tourism, airlines, hospitality, those industries naturally automatically get red flagged by the banks.
Mortgage advisor Michael Letts says people in those sectors need to provide lenders more information than they did before the pandemic.
They will start to ask more questions, which might mean additional income verification.
Unemployment, a major driver for house prices, is forecast to top out around 8% this year. For now, Swa's job in the education sector is secure, and she acknowledges the COVID crisis has created an opportunity for her investment.
I think I've had it really, really good, very lucky, and I wish other people were in a similar position.
Securing a lower interest rate is a rare starting point to enter the first recession in a generation.